Hello and welcome back to another video. In today's video I'm going to be sharing with you how I managed to take advantage of this high probability EURUSD trade. I'm also going to be sharing with you how I actually managed to incorporate the economic calendar and my analysis on the dollar index to make a more informed, precise trading decision on EURUSD. First things first, let's actually start off with our higher time frame analysis on the dollar index. So starting off with our monthly analysis, firstly, I'm going to be highlighting what is the most likely profile price is going to be in. And now the way you do this is quite simply, highlighting, okay, what trend are we in now? And, how have we trended previously to the current live trend? You can see previous to the live trend here, we've had this range of consolidation, and then we've seen a manipulation of this high here into this range of inefficient price action to the upside. Now, this is going to be important to actually highlight because it significantly changes the likelihood of where price is most likely going to make a run. For which level of liquidity. Is it going to be internal range liquidity or external? Now, because we've had this manipulation to the upside, above this range of consolidation, it means more likely than not from this manipulation point onwards, we are going to see some sort of, higher time frame reversal, meaning at some point it's likely during this reversal, leg, that we are going to see some significant levels, such as our previous yearly low, in the opposing direction of the previous trend, actually being targeted, which is exactly what was targeted going into this trading week. Now, dropping down to the weekly, it's going to be important to do the same thing. Okay, so where has price come from in some of our previous weeks? We've seen that we've had this big push to the downside, and then we've seen that market participants have chosen to push prices back into this level of imbalance on the weekly time frame, and then in our most current previous week, we've seen a leg lower. Now, what does this mean? Our leg lower in the previous week. It means more likely than not going into our next week, due to this initial reaction from this inefficient price action here, this imbalance here, that we are going to see lower prices. We're going to see our weekly candle actually close lower. Now, highlighting the actual, drawn liquidity, the closer we are to this drawn liquidity, the more likely we are going to hit it. That's why, we're not looking to rush into a trade straight away as soon as we actually get into the week. So dropping down to the daily, very similar. I'll just refine my analysis a little bit more. What have we seen previously to, our trading week? We've seen this range of consolidation here. We've also seen this leg, of displacement to the downside of inefficient price action, where we've had our imbalances left behind. And we've seen market participants choose to push prices into this. Now, as soon as we start to see some sort of move down, this is where we can highlight that more likely than not, this was going to be our manipulation, where from this point onwards, we are going to see some sort of expansion and continuation of the overall higher time frame trend to the downside, which is exactly what's played out. Now, going into our weekly time frame again, we can see our current, previous week actually managed to close below this low. Adding to the probabilities that more likely than not, market participants were going to choose to push prices lower in our live trading week. So starting off on our analysis on our current week, what can we see? So what was left behind from this expansion? We can see this gap in the market was clearly left behind here, meaning more likely than not, in the start of the week, we are going to see some sort of retracement back into this gap. Okay, now just because the retracement into this gap is predictable doesn't mean it's going to be probable to take advantage of. Quite quickly we can actually see, this unpredictable price action here compared to this predictable clear price action, where we can see this clear downtrend. We can see the differences. Now this just comes down to patience, waiting for our economic calendar to actually, present us with these high impact news folders. So this can be illustrated as well. You can see on the Monday and the Tuesday, we actually have no high impact news folders. So more likely than not, when we don't see these high impact news folders at the first half of the week, price is unpredictable and, low probability to take advantage of. And, it can be quite easily shown. Now, going on to our first news driver on the Wednesday, our FOMC, quite a significant driver at 7 p.m. So we've had the entire day for price action to actually play out. We've seen this push to the upside here, but when our news driver actually comes into play, we haven't actually seen, price make a run for this high here. Now, what does this mean? This means that this high is going to be strong. And now why is it strong? It's because price actually tapped into the gap, and we're in this trend to the downside. So once you can highlight this, it's going to be just, using patience again to see, the trend actually come into fruition on our, 4-hour candles, so we want to see some sort of clear displacement on a higher time frame. Now this becomes clear once we actually disrespect this imbalance here on our 4-hour time frame. Now once we've actually disrespected this gap here, this is when, you want to actually be anticipating that more likely than not, and you want to be ready that more likely than not, you are going to get into some sort of, trade where you're actually selling, the dollar index. So dropping down on a more intraday level and actually looking at, the price action that I had managed to take advantage of, just on this green line here. So the reason I waited, instead of just getting a trade as soon as we disrespect this 4-hour fair value gap, is because we also had another significant driver such as CPI. Now, waiting for this, to pass is going to be important because it gives you an indication of what's most likely going to happen post this. So if we've seen a trend lower, and then this is our CPI driver here at 130, we can actually locate what the point of the news data was and how actually materialized our bars on the chart. So in this case, it was our retracement back into this leg here, when from this point, post our news release, we've actually seen a sell-off. Okay, so we've seen our buy side liquidity on our lower time frame being swept, acting as our manipulation, and then from this we've seen expansion to the downside. Now as soon as this displacement has actually taken place, this is where I want to be pulling up, some of our probability parameters. So OTE, more likely than not, is going to be retraced into. These parameters such as our fair value gaps, more likely than not, they are going to be retraced into. But it's going to be important to wait until predictability comes into play. Waiting for confirmation that market participants do want price lower. So I've waited for the tap in, and as soon as we start to see this 5-minute bearish close here, this is where I'm going to be looking to get in line with a Euro USD trade, targeting our previous yearly low. Now, showing the Euro USD trade itself, very similar. I won't run through the higher time frame again, but you can see quite clearly traded up. This is our news driver here at 130. Seen post our data release, we've seen our retracement into this displacement to the upside. From here, very similar to the dollar index, I waited until we saw, that clear 5-minute reaction from OTE, where we managed to actually get a candle close above this fair value gap. Okay, this is where predictability comes into play. More likely than not, if we manage to close above this and actually disrespect this 5-minute fair value gap, this is where we can predict that more likely than not we are going to see a trend and, prices being traded higher on Euro USD. Now you can see my profit was at the previous yearly high, aligned with the dollar index, and my stop loss was just below the low of our previous retracement to the most current retracement that we actually took advantage of. You can see this level of inefficiency that price actually tapped into here on the 5-minute, and that is where stop loss placement was. Because if price were to, trade lower, then the overall predictability that our previous yearly high being hit significantly in drops